back to Business Consultant. Today we have brought you another financial model. This one is SVOD financial model. As you can see, it includes the funding assumptions, revenue and cost assumption, as well as your subscribers and marketing budget assumptions, OPEX and CAPEX assumptions, as well as working capital assumptions. As you can see over here, these peach cells indicate all the inputs which are changeable. You can change them as accordingly. Whereas these gray cells over here, these are formula cells. They have formulas which are not changeable. Coming towards the HR inputs, the HR input tells you about all the employee payroll assumptions and the calculations. As you can see, these are going on the monthly basis towards 60 months, that is 5 years of calculation. Then comes the startup summary. This startup summary tells you about the first year of the company, tells you about how much funding company is taking and how much expenses the company will be having in its first year and the funding that will be required for the first year to function accurately. It also tells about the company's first year assets, liabilities, and capital. These are all informations. These all informations are also shown in graphical form. Then comes the revenue analysis. The revenue analysis tells you about the new subscribers and total subscribers, as well as the revenue generated from these subscribers on monthly basis coming towards all the 60 months, which is 5 years. It also tells about the cost on these for the next 60 months, that is cost of service. Then comes the marketing budget. The marketing budget tells you about the marketing expense that will be needed to acquire these total number of new subscribers in each year and in each month. Then comes the income statement. The income statement tells you about the net income of the company after its expenses, its EBITDA, after its depreciation, taxes, and interest being cut off, the total net profit left to the company. It also tells you about the loan schedule as well as the depreciation schedule separately in this sheet. Then comes the cash flow statement. The cash flow statement tells you about the cash the company is generating from its operations, its investing activities, as well as its financing activities. It also tells about the payables and receivables of the company. Then comes the balance sheet. The balance sheet tells about the total fixed assets of the company, as you can see over here. It also tells about the total equity and liability of the company, and then it checks the total assets with the total liabilities and equity to see if the balance sheet is equal or not. Break-even analysis tells you about the 5 years break-even sales required by the company. It also gives the graphical information. Then comes the CAC and CLV analysis, which tells you about the customer acquisition cost as well as customer lifetime value and the ratio between the CLV over CAC. Then comes the sensitivity analysis. The sensitivity analysis talks about the three different scenarios that are actual, low, moderate, and then optimistic. These gives you the scenario-based sensitivity analysis as well as it shows in graphical form. Then comes the project evaluation, which tells you about the back of the company and the expected equity percentage that can be offered to the investors, as well as the burn rate analysis and the minimum investment required for the company in each. Then comes the dashboard, the last thing, the last sheet. It gives you the KPIs of the company, as well as it gives all the information in graphical form, so all the financial decisions can be made much easier and accurately and as fast as possible. Thank you very much for watching. This is the end of the video. If you liked the video, do subscribe us. Thank you.